Talk about getting into the fastest car on Wall Street. Bitcoin, Ethereum, the altcoins, and the miners have been absolutely blasting off. I thought that was a perfect introduction to today's video. I'm going to be talking about a couple of the miners. I've got a lot of things to cover though, so even though I've introduced this video as a crypto video or a Bitcoin miner stock video, I've got some other plays that I just absolutely have to talk about because the market's hot right now. A lot of things have been popping off, and I'm going to break down some of those things. This is the Stocks with Josh show. Thank you for joining me. Thank you for hitting the like. Thank you for throwing a heart and saying hi in the comment. If you want to get these types of plays, active calls on YouTube, you got to hit that subscribe button and join the Stock Josh fam. All right, let's talk briefly about DraftKings. DraftKings is reporting earnings after market close today. And, you never know what's going to happen, but there are some things that the chart is telling us in advance. Now, Larry and I were chatting kind of a midday conversation about the stock market, and we decided to do a voice recording and post that on the Discord to give an in-depth perspective on how we viewed the charts as well as the risk to reward on DraftKings right now. Guys, don't sleep on the Discord. It's the Stock Squad Patreon. I get asked a lot, where is the link that I'm talking about? Well, in every video, you see the title of the video, and beneath it, there is a description of that video. And in that description area, the very top link I'm going to post is a link to the Patreon. Now, once you join the Patreon, you'll get an email to join the Discord and get access to everything that we've got over there. And guys, check that out. Now, in that audio recording, I'm going to give you a quick overview of what I said. The implied volatility for DraftKings options has gotten very high, which means the options are expensive. Now, here's what that means to trading the earnings. It means that you can trade options into earnings. However, the minute it stops pushing up and it pulls back a little bit, your options will pull back even harder. You've got to be aware of that. And overall, we're at the top of a move that's been going on for quite a while. DraftKings has not been down in the gutter. It's been up on the mountaintop. And so, yes, there's a few more feet to climb, but not as much as some people are expecting. I see resistance above right now at $46 to $48. And so the risk to reward isn't terribly favorable. It means that if it's like a 3-to-1, 3 being the risk, 1 being the reward. But for those who are seasoned traders who know how to use a stop loss, there's going to be some money to be made on DraftKings this afternoon. All right, I want to talk briefly about Apple, only because I want to talk about what I see in the charts and the fact that I need to cover this in an upcoming video. We have a clear head and shoulders pattern forming on the Apple's chart. But I'm going to give you guys this thought. Before you get too bearish. Now, one, if we get that pattern confirmed, then yes, it's time to be bearish on Apple as well as the rest of the market, because if you've been following this page, you know that I believe in what I call the Apple indicator. Smart money buys Apple stock because it is the world's best investment company, in my opinion. Warren Buffett's got a big pile of Apple stock, and so when you see smart money selling their Apple and not going long, it tells you that there is more concern about the rest of the companies, the rest of the S&P, and so I take that very, very seriously. But here's the warning regarding getting too bearish too soon and just starting to sell everything. The last time we saw a similar head and shoulders pattern forming on NVIDIA, it came down to the neckline, perfect left shoulder, perfect head, perfect right shoulder, and it never closed beneath the neckline. It simply came down, and as soon as it spent 1 or 2 days vacillating at the neckline, it then shot up like a rocket ship and has never turned back. It was also one of those fast-moving cars like I played at the beginning. So the same thing could be setting up for Apple, and that's why we can't short early. I shorted NVIDIA too early. I took an early position, lost some money when it was down at that neckline. I'm not going to make that mistake again. We got to learn from our lessons. I've said many times, I didn't go to Harvard University. Sometimes I chose to go to Harder University, and some of you guys have joined me on that journey. We want to be careful. We want to wait for confirmation. Confirmation would look like a 2-day close beneath the neckline on Apple. And even better, a close on the week beneath the neckline would tell us the markets are going lower, but we're going to be watching that, and I'll talk about that in an upcoming video. Now, another one, before we get into the meat of this video, I've got to talk about SoundHound. SoundHound has been a small cap play that I gave on this channel many months back. We made really good money on it here and there. And in recent days, it sort of whittled away and fell beneath some critical support levels. And I actually got stopped out at $2.10. It then went down into the $1.60 range. It found support again, and people asked me about it. Josh, how about Sound? How about Sound? Well, and I said, the minute it closes back above $2.10, it's a buy. And the minute that it closes above $2.20, it's a confirmed breakout, and that's what we got. Super exciting. It pumped all the way up to $4. It's been vacillating in that area as I speak. And why did that happen? Well, apparently, NVIDIA owns about 1.7 million shares of Sound. And so this got investors excited because they thought, you know what? If the biggest AI company in the world thinks that it's worth investing in Sound, well, maybe it's worth investing for me too. And so we've seen it's been off to the races on SoundHound. Now, why does NVIDIA own SoundHound stock? There could be lots of reasons. One of the reasons is that this company could be setting up for an acquisition. It's a cheap company, would be easily bought by a larger company, and it could be that NVIDIA is taking a position or taking an interest in SoundHound. I don't know. Pure speculation. But the fact is, it was great for the stock and it's caused the stock to go up. Now, I identified resistance yesterday to those who were in it, giving them a perspective of where we could go. Largely between $3.60 and $4 was the resistance range. But we are steadily moving up, and I think that that's pointing to a higher move up, and so don't get scared too early on Sound. We're not seeing rejection. We're seeing it slowly push through resistance. And so what does that mean? Well, the next target that we have is where we previously had two tops at the $5 range, right? And I do want to point out that in the past, I talked about the fact that the second top, even though it was bearish double top, we actually did go a little higher, which was bullish. It signaled that there was the potential, as long as we didn't break the lowest low, that we could come back here. And lo and behold, we have. So I think the next area of resistance is going to be $5. And then after that, I think this is a $7 stock, which is what I said in my very first video when I covered it a long time ago. Let's see how far this NVIDIA can pump up Sound. But here's the warning, guys. I'm going to tell you, you got to set those stop losses. If we get above $4 and we close, here's what I'm going to do. I'm going to set my stop loss, a very conservative low stop loss, down beneath $3.60. And so I think that I want to capture some of my wins. And some people never take profits. I don't want you to be that person. It'd be better to miss the run from $4 to $7 than it would to lose out entirely on the gains that you just made. All right, I'm going to get into the meat of this video, which is crypto here. Before I do, let me take a quick station break for the Moomoo investment app. Guys, this is a zero cost to trade platform with great trading tools, great news, great indicators, one of the best charting mobile phone apps that I have seen out there. I think it is the best. I haven't seen one that I like better. But the best part right now is if you put some money on this and open up a new account, they'll give you up to 15 free stock. But even better than that, they're getting a really aggressive promotion, which they're giving away an 8.1% interest rate for just leaving your money uninvested in your account. So you could load up and begin to store some money there and make that 8% risk-free because you're not riding any stocks right now. Accumulate a little pot, then you can invest on the coming dip in 2024. These markets are hot. They're going to have a swing low. We're in a swing high. You could save up some money, risk-free, earn that 8.1% and invest it later this year. All right, we got to talk about what's happening in the crypto market. Guys, let us reason together. We've entirely broken out. The fact that we got to 50,000 and over 50,000 was huge. It was always possible that we could get to 50,000, but earlier in the year is when that was expected to have happened, and then there was expected a pretty strong pullback before the halving event. Well, the script has changed. It's not going according to cycle. We just had a 20% pullback on crypto, which was very mild. That's a baby pullback for crypto, and it's still progressing forward, and we closed above 50K, which is massive for Bitcoin, and it tells me that this is action that's like the halving event action, which means that we almost have to count it like the halving event is here. Now, the charts, they're never going to say, buy now, it's all in, it's all good. They're never going to give that to you. But here are some conclusions that could be drawn from the current price action we're seeing in Bitcoin. Will there be some kind of a pullback? Yes. Has the phase 2 of the Bitcoin crypto bull cycle begun? I would say the fact that we're over 50K tells me yes. Now, the warning is that we are up against resistance. We're not above resistance, which means we don't have confirmation of the next big leg up to 60, 70K, 80K, but we are at resistance and we're way higher, way later in the game. And so we've got to process what that means. It means that, in my mind, that the big, giant 60% pullback that we've seen in other cycles doesn't appear to be happening. And if it did happen, it would take a black swan event. I don't know if you've ever heard that term, but it's basically an unexpected, unpredicted event to occur to bring us down like that. I'm only expecting 20% pullbacks on continued moves up at this point, which would actually be similar to the volatility that we would see in the markup phase of Bitcoin. I'd love to hear your guys' thoughts. Do you think this is accurate? Do you think that there's a big pullback coming? I said it in yesterday's video, and it's important for me to explain this in more in depth to you guys today. The fact that we didn't test structural support at 31, 32K is actually pretty ominous for the continued run for Bitcoin. So you're like, okay, hold on, Josh. Are you saying it's good or it's bad? It's good that we're going up, and it's time to shift into that perspective, but it's bad for how high this can climb. I want you to consider that coming back and testing structural support is like laying a foundation. If there's any carpenters out there, you understand how to put in a proper header above a door or a window, or how to lay a proper cement foundation to build a house on. Testing structural support is like putting in that proper brace for price action movement up. We don't have it. So we're shooting up without having built the foundation correctly, which means that even though we're going up, we may not go up as high as we could have if we actually built that structural support. So remember, interpreting charts is the charts don't lie. They never lie. They're always 100% accurate. Our ability to understand them varies based on who it is that's doing the looking. And that, a good technical analyst is probably going to be right 60% of the time. A great technical analyst would be right 70% of the time. What the charts are telling me by the fact that we didn't test structural support is that the current move up doesn't have strong legs, but we are absolutely moving higher, and we are in the pump up, markup, Bitcoin moment that we would normally have had at the halving event. And so this is something we got to take inventory of. And here's what I'm going to do. I want to give you guys some technicals for Mara and Riot. I know everybody's going to be like, well, Josh, what about all the other miners? You never talk about CleanSpark. CleanSpark's killing it. I'm going to do some charts on those in the Discord. And guys, I can't put everything on YouTube. I can't make videos on every subject that would be of interest to me. I'm squeezing a ton into this video, but let me give you guys some perspective on what I see in the charts for Mara and Riot, and I either will cover more of the miners in another video, or I will put those charts in the Discord. Let's dive into Mara. What I want you to understand about Mara is where resistance is at. It's between $30 and $32. That's a tough resistance zone, and we have not broken above it. So there's no confirmation at the moment that we're going to push up into the next trade zone. So we're beneath the trade zone that we've been beneath for quite a while. We're still beneath it. But we need to be watching these charts, because if we get above and we close above $32, it means that this party is going higher and faster. Investors are going to feel locked out because they didn't buy on the dip. They were expecting a bigger pullback, which made sense, but they're not going to get it. And if we get above 32, then we're not even going to be in the 20s anymore. We're going to be between the 30s and the 40s. So first, we don't have confirmation that we're in the next leg up. We're simply at resistance right now, but this is the zone that we have to watch, 30 to 32. A close above 32 means that we can get up into the 40s, and it means that we will not see the 20s again, or we won't see the low 20s for a while until this crypto move is really slowing down. So that's Mara for you. All right, and then we got Riot. So I see resistance between 18 to 20 on Riot. That's the area that we've yet to break above. That's critical resistance. And if we do break above it, then I think we can go up to $24 to $30 on Riot. However, if we were to stay beneath it and this whole rally were to significantly calm down and cool off, critical support for Riot is at 16, 13, and 11. And out of all of it, 13 would be the most likely if we were to get a major pullback. But at this moment, lower numbers have been taken off of the table. And then briefly back to Mara for a minute. Support there is 20, 18, and 16. 18 being the most likely, and again, lower levels seem to be off the table right now, and it would take a lot to push us much further down than 18 on Mara right now with where we're at in the timeline of this upcoming halving event and the momentum that is still yet to come into crypto. Guys, I hope this was helpful to you. Thank you for joining me today. Again, the likes and the comments push the video out to more viewers, so I appreciate your support there. And hit that subscribe if you want to get the next update. Always something interesting being talked about on this show. Let me know in the comments if you guys appreciate that. Don't sleep on the Discord. That's where I'm going to be doing a lot of data dumps and chart dumps here in the coming hours. I appreciate each and every one of you. Peace and blessings. Take care.